Hey, you guys. This is Cade Kerrigan. I'm here with Dale Stanford. He's with Primary Residential Mortgage. He's one of the lenders that we use quite often. He's been around a long time, been doing it quite a while. I'll let him kind of take over and introduce himself and why he got into lending and what he loves about it.
Awesome. Yeah, thanks, Cade. Happy to be here. So, been doing lending for over 25 years now and have a fantastic team. Just love the mortgage business, housing, real estate, the whole bit. So, no matter how many times you bought a house, it's always exciting. There's always a little bit of nerves involved. And our focus as a team is just really making it a great experience for our clients. And there's a lot that goes into that. I mean, it's just being available and having expertise, but it's also adding value. And so we're going to talk about some of those things today of what makes a difference, right? Of really making it a great experience and going above and beyond for our clients.
Absolutely. One thing I've learned a lot with jumping into real estate and becoming an agent and all this stuff is that every deal is different. And so, having somebody who can, not everything is just, cookie cutter, cut dry. Like every deal is different. And there's a lot of things you got to do differently per client to make it work.
Yeah, absolutely.
So one of the questions I wanted to ask, I think this is probably something that's on everybody's mind right now with the market, the rates. Where is the market going next year? Are rates going to come down? Are they going to keep going up? Feds have come out and said they're going to stop raising rates. We're not sure if that's true or not. Is it a good time to buy a house right now? If so, why and why not?
Yeah, great question. I get that asked all the time. In fact, it's funny. Sometimes clients will do the handoff with the realtor and talking, and then they'll kind of on the side, hey, is this really a good decision right now? And I think part of that's just because of the media and some of the misinformation that's out there. But here's what I say about buying a house. It's, to me, I often compare it to planting a tree. When's the best time to plant a tree? 20 years ago. Absolutely. The second best time to plant a tree is today. And I think that's the same with buying a house. If we all would have bought a bunch of houses 20 years ago, we'd have a ton of equity and be in a good financial position. But the second best time is today. And I think that's true almost always. There can be some exceptions. But a couple things on that real quick is I tell people about interest rates. I wouldn't make my house buying decision based on trying to time the market with rates because you can't. It's just like the stock market, when to buy and when to sell. There is an art to that. But with interest rates, it's a little different because if you buy now and rates go up, then you're glad you bought now.
Right.
If you buy now and rates go down, we just refinance. So there's not really a reason to not buy now because of rates. And if rates do come down, we refinance to get a lower rate, lower payment. But the key is the house price, right? If interest rates do go down, home prices are going up.
Absolutely.
And so if you can buy now at today's prices, then you're going to get at the better price. And if rates go down, you refinance, you get the best of both worlds. Even if rates don't go down, if they just stabilize and stay where they're at, home prices have shown to just continually go up. It's never a straight line, like it'll up and down, but we had a little bit of price reduction over the last bit of time. And, but even this year to date, we're still up.
Yes,
right. So it's just good to buy.
It is. I was going to say, drawing a blank, I guess.
I mean, it's scary, right? Because I think the problem is the affordability. And so that's one of the things that we're going to talk about today is because I do sympathize with, first-time home buyers, right? If they don't have a huge down payment or a ton of equity from their current home to move in, it's a little nerve-wracking to just think back and say, gosh, 5 years ago, home prices were lower. If we go back 2 years ago, rates were lower.
Right.
But big picture, I still think it's a good time to buy.
So what I was going to say, it goes along with that, is right now with the rates being high and the competition on the homes being lower than they were 2 years ago, that gives the buyer a lot of negotiating power, which 2 years ago you didn't have. 2 years ago you were offering $10,000, $15,000, $20,000, $50,000 over asking price, just hoping to get your offer accepted. You were waiving, due diligence. You were waiving appraisal. You were doing whatever you could to get the home. And now you have the option to, you see a home, you like a home, you don't need to go look at it that day. You can look at it that weekend. You can think about it. You can ponder it. You can negotiate the price down. You can also then go into your inspection. Then you can also, if things come back on the inspection not so great, you can negotiate the price of that down even more. You know what I mean? So there's a lot of value in buying a home when the market is cool.
Absolutely. So, and in addition to that, sellers are willing to negotiate, work with you, do things they weren't willing to do before, didn't need to do before. And then additionally, and I think we're going to touch on this too, is there's also there's more grants available. There's different things. So it's in a position where you can actually get a fair deal, a good deal. And it's also very helpful when the seller pays closing costs. You can use towards, you can then have points, maybe do a temporary buy down, 2-1 buy down, or a permanent buy down. It just helps a lot.
Absolutely. So let's talk about moving on to those grants and those down payment assistant programs that you have available.
There's a lot of them out there, and there's always grants out there regardless of the market. But right now, because of how it is, there's just more that are popping up. I think one of the hot topic ones is the $50,000 one, right? Because this is such a big amount.
County, yeah.
So the way that one works is, Davis County only. And then there's income restrictions on almost all of these. If you make too much money, you don't qualify. So, they can just check with you, check with me, and, we can run through the details of how these work. But generally speaking, that one, for example, is $50,000 that can go towards down payment, closing costs, permanent rate buy down. I just did some quick calculations this morning on that. As far as what that does to your payment, if you just reduce the loan amount by $50,000, depending on the overall picture, but roughly that can lower your payment about $300.
Cool.
If you use it towards paying points and buying the rate down lower and doing a combination of that, it could be up to a $400 reduction in payment. So
which is huge.
That's huge.
Absolutely.
Yeah, absolutely
That's
huge. So that's a good one. There's also the $20,000 Utah housing one that's for new construction. That's a max sales price of $450,000. But that one's great. I mean, $20,000, and there's no interest on it. There's no interest, no payment. It's just a lien that goes against your house. So it's a loan. It's not like a true grant where it's just free money that they're giving you, but it's still, you can use that money to lower the payment quite a bit.
The other good thing about new construction right now is there's a lot of builders who are trying to give incentives for you to come buy their homes. They have a lot of properties that are sitting.
Yep.
So they're trying to get them sold. So there's a lot of programs that they try and do to help you. They have a lot of sod credits.
Yep.
They have, they'll do 10-year. I've seen 10-year structural warranties. I've seen them extend. I've seen them extend appliance warranties. I've seen them also buy your appliances. So there's stuff like that where you can negotiate because the market's a little bit slower and they're trying to move
absolutely. Stuff. And some of them are getting real aggressive. They maybe some overbuilt, maybe overextended to an extent. So they've just got to get them sold. And there's some that are trying to really clear off before the end of the year. Yeah. So literally, there's some urgency right now to take advantage of some of those. So
absolutely.
Yeah. No, there's great. Just a couple others too. There's for any veteran, there's a $2,500 grant that is actually just free money. Like that's $2,500 if they qualify for it. That we just had a client close here a few weeks ago that they didn't know about it, hadn't heard about it, and we said, hey, here's an extra $2,500. They qualified for it, and it just right at the bat saved them that much money.
Absolutely.
There's a law enforcement grant.
Awesome.
That's up to $25,000. So there's a lot of them, right? Like we don't have time to go through all of them, but there's some good options out there.
Perfect. So we talked about lowering the monthly payment with some of these grants and these options as far as down payment assistance, whatever it is. What might be some other ways to help lower that down payment? 'Cause I know that's we all look at the purchase price, we look at the loan, but really the defining number is that monthly payment. Can we make it work?
Yeah.
Can we not? So.
Yeah, back to that affordability. That's a great question. And I'm crazy passionate about this because there's a lot of things that can be done. And so I'm going to use kind of a silly example real quick. So I thought about this a while ago with Subway, okay? Everyone knows Subway sandwich, right? For lunch, you run and grab a sandwich. How many different unique sandwiches do you think you can make based on all the different variables, right? Kind of a weird question, but just I did the math on it. I actually had to check with a math expert to make sure I was doing it right. But let's just assume this. If there's 8 different bread choices, right? 10 different meat choices, 7 cheese, 12 different toppings of, lettuce, olives, whatever. 3 different spices, salt, pepper, or oregano. 10 sauces, you can toast it or not. And if you do the math on that, there's 403,000 different scenarios.
Jeez, that's a lot.
Isn't that crazy?
That's a lot of different
and so
sandwiches.
the reason why I bring that up is because mortgage isn't rocket science, but it's complex, right? There's a lot of different scenarios, right? Of, do we do this type of loan type, and we have 35 different loan types that we can do for clients. And then we throw in, do we do the grant? Do we do a 2-1 buy down? Do we buy the rate down permanently? Do we on and on, right? Like there's kind of like Subway. There's so many different scenarios, and how we structure a loan makes a big difference. So I worked up 2 different scenarios real quick because I think this is really helpful. There's a lot of really good lenders out there. But if you have an expert lender,
Mm-hmm.
just like an expert realtor, that makes all the difference in the world.
Absolutely.
And here's just a scenario. So I just kind of came up with this one and mapped it out. If a client came in buying a $500,000 property, let's say they're looking for a condo, they're going to put 15% down. Their credit score is 719. They have a 50% debt to income ratio. They're a first-time home buyer. Here's how a lot of times that would pan out. Based on that sales price and current rates, that gives them a certain payment, obviously. But if we restructure it, the exact same scenario, and here's just a couple of changes I would make. We switch it to a townhouse. I mean, most people know from a financing standpoint, the interest rate's a little higher on a condo.
Mm-hmm.
Okay, so if you switch to a townhouse, that's different. If we change the down payment from 15% to 5%, that gives us a lot of money to do some different things. So it allows us to buy the rate down. We can buy out mortgage insurance. We can do some things to improve the credit score, right? So that's something huge that we won't spend a ton. We can do a whole podcast on credit, right?
Absolutely.
But that is huge. And there's some things that we do as a lender that is an amazing tool called Credit Expert. I can tell someone off the top of my head what to do to improve their score. But Credit Expert goes in with their algorithm based on their credit report that we just pulled and tells us exactly, like to the dollar, how much to pay cards down to maximize their credit score. And that makes a huge difference. So using some of that money to buy the rate down and so forth, the scenario is we could change their payment. We could lower the payment by $349 a month.
And that's a lot.
Not crazy,
That's
right?
a lot, yeah.
So they're bringing the exact same amount of money to closing. It's just how we structure the loan.
Mm-hmm.
And I feel like that's something that we really excel at that is huge, is taking the time, number one, to know all the different tweaks and data points. That's something that I've been really researching even more recently is what are all the little tweaks I can do to loan to value, to debt to income ratio, to raising credit score, to, on and on, just like the subway example.
Right.
There's so many different scenarios. But those little tweaks make a huge difference. In this case, a $350 one. So,
yeah, and I think it's really important to be able to find a team that will represent you and help kind of specialize your plan for you, to achieve your goal of whatever that is. And so
right.
if you can find a team that's able to, jump through some extra hoops, put in some of the extra work, the research, whatever it is, to make sure that they find the best route for you, their best roadmap. That way you're getting the best bang for your buck and you're able to save as much money as you can, or you're going to get into the right property, whatever it is, right?
Yeah, absolutely. And see, most home buyers, and rightfully so, are just so fixated on what's the interest rate, which is super important.
Right.
Right. But beyond that, it's, okay, how are we going to structure this loan? And there's tons of other examples we won't take time for right now, but being able to take the same amount of money and drop your payment by $349 a month, that's huge.
Yeah,
right?
absolutely.
It's huge in just having that affordability aspect. It's also huge in buying power, right?
Yeah.
If you need to buy or want to buy a more expensive home, we do some of those tweaks, and now you qualify.
Now
for
you're
more.
able to.
Yeah,
absolutely. So I just want to wrap up here. I'll ask Dale one last question. In your opinion, what are 3 key things as a buyer at being successful in purchasing a home and being able to, have a smooth, relatively happy process?
Yeah.
It's tough.
That is the question, and I, in my 25 years experience, I know that my answer is spot on because I've seen so many different scenarios. The most important thing is to have an expert agent. There's a lot of real estate agents out there, and like in any field, there's good, there's better, there's best, right? So aligning yourself with an expert real estate agent is the number one key.
Absolutely.
Sometimes buyers think I can do this on my own. No, I mean you can for sure, but it's going to be way better to have a professional who's knows the market, knows all these different things, knows how to negotiate, and then can represent you. So that's by far the most important. Second, I would say, is to have an expert lender.
Mm-hmm.
Like I say, honestly, most lenders don't do this restructuring thing with that example that we just went through. Maybe they do to an extent, right? I mean, they definitely will do to an extent, but to know all those different data points of how can really maximize your best benefit and lowest payment, I think is key. And then third thing for a home buyer, at least preparing for the loan and qualifying unless you're paying cash, is just the acronym CIA. CIA is credit, income, and assets.
Oh, cool.
The assets meaning, basically your cash to close. So the more money you can save, that just gives you options. It's huge. And then I'd say talk to a lender sooner than later.
Yes.
Talk to the realtor, right? Team up with that expert realtor. And then even if you're buying 6 months from now, if I can have a consultation with them and, plan for some of these things to help them get in a better position, it makes a big difference.
Absolutely. Awesome. Thanks, you guys. This is Dale Stanford with Primary Residential Mortgage. If you have any questions, feel free to reach out. Thanks, you guys.
Thanks, guys.